So this latest breakdown below 107.96 in the euro is a significant development and now strengthens the possibility for a lower top at 110.60 ahead of the next downside extension and bearish resumption back towards initial support in the form of the December low at 105.21. This low guards against the more critical support further down by that March multi-year base at 104.60. At this point, look for any rallies to be very well capped, while ultimately only back above 110.60 would force a shift in the outlook. Sterling dollar. So cable continues to trade lower, adhering to a well-defined downtrend, with the market now within a stone's throw of critical 2015 lows at 145.66. At this point, any rally should be very well capped into the 150 area, while ultimately only back above 152.40 would compromise the bearish outlook. Dollar yen. So dollar yen setbacks have extended well below 120, with the market now focused on a test of support which comes in at 118.06 going back to mid-October. At this point, deeper setbacks are eventually favored towards a retest of the August critical low at 116.12, while rallies should be very well capped now ahead of 122. Ultimately, only back above 123.76 would compromise the bearish outlook for dollar yen. Euro Swiss. Euro Swiss continues to trade within a multi-day, multi-week, and multi-month consolidation, though given the recovery outlook in this market off those record lows from January of 2015, the market is favored to continue to trade to the top side with a break above 110.50 to open the next major upside extension towards 115 further up. In the interim, any setback should be very well supported towards 107, with only a break back below 107.15 to compromise the recovery outlook for Euro Swiss. Aussie dollar. So some sharp setbacks in Aussie over the past several sessions, with the market now clearly adhering to a more well-defined downtrend after stalling out once again ahead of the 74 area. At this point, deeper setbacks are favored back towards the August 2015 multi-year low just ahead of 69, while ultimately only back above 73.85 would compromise this bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has been comfortable consolidating recent gains off fresh 11-year highs just over 140, though the market continues to trade within a highly constructive structure and favors additional upside beyond 140.01, that recent high, and towards the 145 area further up. At this point, if we do see any setbacks, they should be very well supported ahead of that 134.57 previous resistance, now turned support from September, with a higher low sought out ahead of that next major upside extension. Kiwi dollar. So Kiwi has been well capped by that critical medium-term resistance in the 69 area, with the market once again stalling out and trading lower over the past couple of sessions. This could open the door for deeper setbacks and acceleration of declines back towards initial medium-term support around the 64.30 area, which comes in by that mid-November low, below which would then expose a retest of the critical August multi-year base closer to 60. At this point, only back above 69 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to trade with a now bearish tone after breaking down below 2000 again in recent trade. At this point, it looks like the market is carving out a longer term top, with a medium term resistance now coming in at 2117. Look for the market now to be well capped towards the 2055 2060 area, with a break back below the recent lows that came in at 1988 to accelerate declines towards next medium term support at 1870. Ultimately, though, only back above 2117 would negate the current topish outlook and open the door for an acceleration back towards the 2137 May 2015 record high. Gold. So gold continues to show signs of a potential base, though the market would need to establish back above 1100 to take the immediate pressure off the downside and accelerate gains. At this point, though, while the market holds below 1100, there is risk for additional bearish consolidation ahead of a breakdown below recent multi-year lows at 1046 and towards critical psychological barriers at 1000 further down. So for the gold market right now, key levels to watch above and below for clearer directional insight are 1100 above and 1046 below.